The opinions expressed on Two-Way Traffic are those of Darren Coleman and are for general information purposes only. It does not constitute any legally binding engagement between the podcasters and anyone else. Always check with your advisors to obtain your own tax or investment advice. Welcome to Two-Way Traffic with Darren Coleman. In this series, Darren aims to guide you through the complexities, complications, implications, and most importantly, the advantages of having money and family on both sides of the border.
In this episode, Kevin Dupacs Dumas, Associate VP of Business Development at Natbank in Florida, joins Darren to talk about a wide range of issues affecting Canadians who own property in the state. Enjoy.
Hi, everyone. Welcome back to another edition of Two-Way Traffic, the cross-border podcast. I'm your host and guide, Darren Coleman. And today I'm joined by my friend Kevin Dupacs Dumas. And Kevin's dialing in or watching in or phoning in or zooming in or whatever system we're using here from Florida. Where exactly in Florida are you in right now, Kevin? Where do I
am calling from Naples in Florida from our new location that we opened up last year.
Fantastic. So we're going to talk about what this new location is. And I know you have a number of places in Florida that you guys operate out of. So Kevin, you're the AVP of Natbank in Florida. So you guys have offices in Naples. Where else?
Yeah, we have also three other branches located on the East Coast of Florida where we started. So we have one in Hollywood, one in Pompano Beach, and one in Boynton Beach. So these three ones have been operating, I would say Hollywood and Pompano for the past 30 years. I would say our Boynton one was opened in 2015, and and for the Naples one, it was last year.
Okay, and this conversation is really going to be helpful for Canadians who have or want to have property in those areas in Florida, really anywhere in Florida. Yeah. So just to guide people through this, Canadians may not know who Natbank is, but they will when you explain it to them. So who's Natbank?
Yeah, absolutely. So Natbank was created 30 years ago from National Bank of Canada. So we are a wholly owned subsidiary of National Bank of Canada. So this is essentially who Natbank is. So we've been operating down here for 30 years and given either financing solutions or banking solutions. So primarily for Canadians. So it comes to mind that a lot of Canadians come down may not have access to the financing market down here or the banking market. So we take care of those needs for them, especially for the ones that spend half of their year down here in Florida.
Yeah. So you and I just happened to meet each other. I was in Naples and I happened to be walking down the street and you guys were doing a presentation in your branch for your clients and you had a cross-border attorney that was doing the presentation. And it just happened to be my good friend Shlomi Levy, who's been on this podcast previously. And it just complete fluke that Shlomi was doing your presentation. I happened to see him. You guys let me in and we had a little chat. So thanks for letting me interrupt it.
Absolutely.
And by the way, I should make sure for the listener that I give full disclosure. I actually was a vice president at National Bank Financial for about 5 months after they acquired HSBC. So just if anybody's looking at my LinkedIn going, this sounds familiar, I actually was a vice president at National Bank for a period of time. So this idea that you and I talked about that is so helpful for Canadians. So what are some of the challenges, if they didn't have your solution that we're going to talk about, that Canadians have if they have a property, wish to buy a property in the U.S.? How easy is it for a Canadian to go into a U.S. bank and say, I'd like a mortgage on my condo, like a mortgage on my property? How easy is it for them to get a U.S. domiciled mortgage?
And I would say this is actually the biggest problem for Canadians coming down here, because once they get down here, they realize that U.S. bank, they cannot use their Canadian credit history or their Canadian assets. They're not going to be using any kind of documents that come from Canada. So this is essentially the biggest problem. So they don't qualify for a loan, or if they do, they have to go to the private lenders, which usually won't really do a loan at more than 50% LTV. So this is a big problem for Canadians. So Canadians have to not only be faced with the currency exchange risk of doing that, but they're also faced with the opportunity cost, where they're going to have to get either funds from investments that they're holding and putting it into buying the property. So This is essentially the biggest thing that they'll face down here.
Yeah, and that's what we've witnessed is as clients have properties in the U.S. Traditionally, what they've had to do, because you're right, the U.S. financial system, credit system, they don't have what's called a FICO score. They may have a credit bureau in Canada, but they don't have one on the U.S. side. So the U.S. bankers are like, we know nothing about you. So usually they have to resort to putting a line of credit on their property in Canada and then become a cash buyer in the U.S. But are there differences between a U.S. mortgage, if they could get one, and a Canadian mortgage for a U.S. property? So so that traditional way they did of just saying, look, I'll do a line of credit on my house in Toronto or Montreal, and I want to buy that property there. Is there a benefit if they could to have a U.S. based mortgage on that property?
Yes, absolutely. So first off, you can borrow in U.S. fund versus borrowing in Canadian funds to have to transfer that. As well, you're leaving some room in Canada for future borrowings in case you have renovation on your house in Canada and things like that. So one of the big advantage here in the U.S. Getting a mortgage in the U.S. versus in Canada as well is that in the U.S. we'll have competitive rate not based on the same rate as in Canada, which are more expensive since we're a U.S. bank. So that's one of the advantage, and as well we can either use I would say again credit scores versus other banks to do the financing. So
The other things that sometimes comes up, people ask about is they're often surprised because in Canada, typically the longest term that you can lock your mortgage rate in is 5 years. Is that the same in the United States, or can you have a different term for your rate?
So for us, what we tend on doing, we try to offer products that are similar to the Canadian products.
Okay.
So they will be very similar in terms of terms. So five
Got it.
years fixed, then it's going to be variable each year. However, here the one of the biggest difference that I would say in U.S. mortgages versus Canadian mortgages is people that are buying primary or secondary houses down here. There is no prepayment penalty when you reimburse the loan in advance. So sometimes it gives a
Oh,
lot more
wow.
flexibility for Canadians. Now, if we're into investment mortgages, so rentals and things like that, that's a bit different. And those there are penalties, but so it allows for Canadians, when they come into some significant sums of money, or if they want to pay it down quicker, they're absolutely allowed to do that.
That's a big one because in Canada, there's usually one of two calculations a bank will do if you want to pay your mortgage down sooner. So the bank says, well, we're going to get less interest, so you've got to cover some of that. So
Exactly.
so they usually say it's 3 months interest or interest rate differential or something, depending which one's higher, right?
Exactly.
So it's you were a lender in Canada before you moved down to Florida, yeah?
No, I actually wasn't, but
Oh,
I'm quite aware of the main questions, or I would say that our customers are asking or looking at. So that's usually one of the biggest points that's going to come out from versus Canada.
yeah, because we've had clients that they suddenly are able to pay off their mortgage. They go into the bank and they discover that hang on a minute, it's tens of thousands of dollars in
Yeah.
interest I'm paying to not pay interest more. Like what's happening? So we have sometimes there's some strategies we can use about how they use prepayment privileges and other things. But I didn't realize that with a U.S. mortgage there was no prepayment penalty. That's extremely
Mhm.
helpful to have that facility.
And it's
So
very
just to
common in the
recap,
US.
is it okay? So that's actually very helpful to know that you're going to keep the currency the same because as we've seen, our currency in the U.S. dollar, Canadian dollar moves quite a lot. You're right; you're not going to use up your credit facility. So if you have a line of credit in your house in Canada, you're not using that up to buy it. And when you said better rate, do you have a sense of what is it like a 0.25% difference, or is it more than that? What would be kind of the magnitude of difference that people would often see?
Yeah, so typically what I'm seeing is as you've mentioned earlier, so the alternative for our customers to get a mortgage with us would be to borrow on their property in Canada, and that's
Right.
typically done with a HELOC. So,
Yes.
HELOC rates, I think in Canada they're probably right around 7.5% on those right now.
Okay.
So you're paying you have a rate at 7 or 7.5% versus here in the US our rates start for a fixed mortgage at 5.625. So there's still
Wow.
that rate differential to consider.
Wow. So it's over a 1% difference. That's pretty
Yeah.
significant on a mortgage. That's very, very significant. So the target client you guys have, because one of the other things I think is interesting is what percentage of your staff at the Natbank branches do only a few of them speak French, or do most of them speak French?
No, so I would say right around 90% of our staff speaks French. So we're a team of 45 down here in Florida, and there are everybody that deals with customers or talks with customers will always speak French. So this is one of the very positive thing that we're very keen on keeping as well. We find it very important for our Canadian customers.
Right. They also speak English, obviously, but
Of
for
course.
clients that would prefer to be spoken to in their home language, that's really, really helpful.
Yeah.
So when people go down, they have a property in the United States, or they want to have a property in the United States. You guys can really help them with a lot of things. So you can help them set up a bank account to pay their phone bill and all those other things that they've got down there, right?
Absolutely. So we offer the full deposit solution as well, and transactional services. So either if customer want to transfer money from Canada, keep some in the US, take care of, as you know, there's electricity to pay, their water bills, insurance, taxes. So it's essentially very important to have a bank account down here as well. And it comes as well with things like credit card, US based credit cards to use in the US, and you pay it from your Natbank account down in Florida. So you really kind of split the US portion from the Canadian portion on that level.
And this is interesting. This is one of the things we find when clients do move to the United States is we warn them that setting up your banking is actually going to be much harder than you think it is. Because even things like, yes, you might be able to open a bank account, but getting a credit card with only, we've had people that are multimillionaires that go down and they're told, oh, you can have a credit card with a $500 limit. They're like, I spend more than that on lunch. What am I supposed to do? Right.
So exactly, and this is one of the biggest issues. So once again, if you don't have a U.S. Social Security number, it becomes very hard to get a credit card. But not only that, it becomes very hard as well to get a U.S. bank account in the U.S. A lot of banks have been kind of going away from opening bank account to foreigners. So we've seen it with Wells Fargo, who've recently shut down their foreigners program, and because of the compliance that's behind it. So if you think about it from Wells Fargo's perspective, 95% of their customers are U.S. based. So the amount of regulation compliance that goes into that 5%, it's not worth it for them. So when you have a bank like us, so I would say it's a niche market, but it's not really. We have over 15,000 customers, so this is kind of a specialty there. So we are aware of the regulation, we follow it, and that's why we're able to open account for foreigners not only in Canada but also in Europe and things like that.
That's interesting because we've obviously seen that over the last bunch of years with investment accounts. That if people who may have had one, they are being told you can't have it anymore, or they think they can open one and discover, no, you actually are not allowed. But I didn't realize that banking had now finally caught up to that problem.
Yeah.
Interesting.
So that's what happens with Wells Fargo. I think they sent a letter in 2022, and they did it kind of the U.S. way, So they send a letter on the first of the month, and then on the 30th, on the 30th, they sent a check with the remaining balance, and that was the end of it.
Yeah, that's pretty scary. Well, you're right, because when people have a property, they need a bank account to be able to, just do day-to-day things. They want a credit card that's in U.S. dollars, but they also want it in the United States so they can make sure they get their cell phone and all the other things, and their Netflix account, all that kind of stuff.
Exactly.
So do you have a sense of when people come down, are you usually getting people that are buying a property for the first time? Or do you also get people that said, look, I bought the property a bunch of years ago. I used my line of credit in Canada. Now I'd like to change that. Do you also facilitate that kind of transaction?
Yes, absolutely. So we'll handle both purchases and refinance cash out. So people that bought the property a long time ago, paid it off, or never had a mortgage and want to access that equity, we can help either or. For us, it's kind of a similar product, and we can help them. Once the people cash out, they're free to do what they want with the money. So send it back to Canada, open a new business, and once the money's theirs, it's theirs.
That's very, very helpful. Now, I'm also curious if you're seeing a change in how many clients are coming down. Like, obviously, we're right now in the middle of this. We had Trump's Liberation Day not long ago. We've got a lot of people kind of concerned about tariffs and travel. Are you still seeing people coming down and moving to Florida or buying property in Florida, or is that just quieted down a little bit while we've got this disturbance in the forest?
So I would say it quieted down slightly versus what we're seeing the past few months, but this also concorded with the end of the season, as we like to call it. So customers are going back up north. So we did. It is a concern for a lot of our customers, but overall, we're seeing people wanting to come back. We're not seeing a lot of customers selling their property or just moving back. So we're hopeful that we're hopeful that the trend's going to remain like this, so that they come back next year. But we haven't seen as much disruption here in the U.S.
Right. Okay, that's helpful to know. And then, do you guys see a difference in the different markets you're in? Because you picked a certain number of locations for a reason, and you just opened the one in Naples. Are there other plans are there other markets in Florida that you guys think might be interesting, or you're pretty good? This covers the major areas where Canadians tend to flock.
Yeah, so we think we've kind of pinpointed down in Florida where customers are mainly located. There's other area that look very promising. So we've opened up in Naples. We know that there's a lot of activity up in Lee County as well for Canadians. They're flying into Fort Myers Airport. We're also seeing a lot of customers going up to Orlando for investment properties. That's essential. More than I would say half of our investment portfolio is located just in Orlando itself.
That's interesting. And how many lending professionals would you guys have in terms of, is it like one person racing around like you racing around all these places, or do you guys have a pretty solid team so someone can just phone or find you guys at a branch and there's lots of support for them?
Yeah, exactly. So we have one employee per branch, and so one lending officer per branch. So we are usually pretty spot on and relatively quick at doing the financings. In the U.S., it's important to note as well that it's not a process that takes a few days like we're accustomed to in Canada. Here, there's a lot more regulation, and it can usually take 30 to 45 days. But with the current three loan officers that we have, we're able to sustain the demand.
Okay, well that's fair, because if somebody's looking to buy a property, they need to understand their lead times. But I would offer that I think many Canadians, if they're buying a property, they don't know that you guys could even do this. So this is a really helpful feature. Or if they did go the other route, you guys can give them an option to change it.
Exactly. And, just like you said, a lot of customers don't necessarily know or just bought the property cash 20, 25 years ago when it was not as mainstream. But now we have customers that are buying properties with us, over 10, 15 properties, and for rentals, investment, primary. And so I would say the word got around.
Well, there's another element to this too that I should mention, because we've seen people do this, is that they'll use leverage for some estate planning purposes, right? So if we have someone who maybe bought their condo in Florida 20 or 30 years ago, it's had significant price appreciation, there's no debt attached to it, but they want to kind of figure out how they're going to equal the score, as it were, between a couple of their kids. So maybe one child uses it and they're going to inherit it, the other one doesn't. Or they want to be able to do something else. They want to get some of that liquidity out. They want to somehow take advantage of the value of this property that's gone up so much. So using a mortgage on that property allows them to suddenly get some flexibility. They can buy a new car, they can give money to their kids, they can do whatever they want to do with it. Exactly. That's something you guys can create for them, true, isn't it? Some liquidity
and
that
asset. And that is something we can create for them. And as we know, just like in Canada, so mortgage interest is tax deductible on rental properties. And
that's the next thing I was going to mention, is that they are able to do that when they do this refinance, right? Is this becomes a tax deductible expense?
Exactly. So the interest is tax deductible, and also it's important to know that once you refinance your property, this is not a taxable gain or anything like that. Or if you take the money, send it back to Canada, and make some money on the forex, on the currency exchange, this is not a taxable gain. So that's a very important distinction of sometimes of our customers when they're trying to see what to do with the property. Should I sell it? Should I rent it? Should I refinance it?
No, this is a very powerful financial planning consideration, because, as I say, traditionally they looked at the asset in the United States and said, well, it's worth what it's worth. I can't sell the living room. All right, so I either sell the whole asset to realize its value, or I just go, well, it's a notional amount until we finally sell it. So you guys, because it's a U.S. mortgage, and because the CAT tax deductibility makes it a lower cost to them, this does provide another means to put some grease in their financial machine.
Yes, correct. And sometimes there are fiscal strategies. I don't want to get too deep into this, but if you're borrowing here in the U.S. to finance another investment opportunity up in Canada, this kind of becomes as well tax deductible. So you can deduct that interest from the income you're generating on the other investment. as long as those funds are used for that purpose.
So, by the way, we're not giving tax advice. This is just two guys talking. But hey, that might be an idea to run past your accountant.
Absolutely, absolutely.
Right, but that's a powerful idea that people can use the tax deductibility of the mortgage on the U.S., which is allowed, and then as long as you use it for investment purposes in Canada, you're good. So This is, as I say, a way for people to generate liquidity out of an asset that traditionally they really weren't. Because if you'd own that condo in Florida, that property in Florida, you can't really call your bank in Canada and say, I'd like to borrow against it. Because they're like, well, how do we appraise it? How do we use it as they're not able to use it as collateral in the way you guys can, right?
Exactly. And it's also regarding the recording of what they call here the deed. So the title of the property with the counties and everything, that they won't do it if it's a foreign company, let's say. So this becomes a big issue for banks trying to finance from up north. So usually what they'll do to be able to circumvent that is they'll tie up some assets that are up in Canada against the loan, which kind of defeats the purpose of not using too much funds or not to tie it up.
That's a great strategy. Now, by the way, how long have you guys been doing this? Because I only knew about this because you and I happened to meet each other because I was walking down the street and I saw a friend. So is this a relatively new capability, relatively new banking option that Canadians have? Or how long have you guys been running Natbank in the U.S.?
So we've been running Natbank in the U.S. since 1994. I was going to say 1993, 1994. So we've been offering financing ever since. We did see a big pickup right after the financial crisis in 2010, 2011. Just a sharp increase on that level. But for 30 years, we've been providing advice for Canadians coming down here. And one of the biggest thing as well, the main concern is, in Canada, we used to close on a property quickly, go to the notary, sign a couple of documents. Here in the U.S., it's quite different. There's an insurance due to hurricanes. There is a homeowners association. There is the prepaid taxes to be paid. So a lot of things that's where we come in with that expertise from 30 years and pass it on to our customers. And it's also not easy when it's not for a French customer, especially dealing with this when it's fully in English. So,
no, that's a very, very good point. But this is very helpful because in many cases, someone's buying a property and they're used to the Canadian way of doing it, but they're at a loss because they don't know the U.S. way of doing it. And if they're using their Canadian line of credit, the Canadian banker is not going to help them. So you guys can really help them navigate that complexity of how do I acquire a property in Canada? What's the same? What's different? And you guys can make sure they don't kind of step in a trap.
Yeah, and the good thing I think it really offers a choice to the client. So you can use your Canadian funds like you were planning, or you can obtain financing. And as you touched a tiny bit on previously on the exchange rate right now, it's let's just say it's not really favorable, and selling off investments that might not be the right choice for the customer or the thing that they would like to do. They might prefer an alternative. So.
Yeah, no, it's fair. And again, we're having an election in Canada, as you know. I think you got your write-in ballot probably, where you just put in the name of somebody. A friend of mine showed me his that he got. I'm like, you don't even pick anybody; you just write a name in. I thought that was an interesting way to do things. But we saw when Trump got elected each time. Move to Canada became the number one Google search term. I'm hearing some people say, look, in Canada, if that guy wins, I'm leaving. Yeah. The guy is not relevant because both guys' names come up. Or all three guys' names come up, I guess.
And we've had a few in Ireland as well, I think.
Oh, is that right?
Yeah. We've been saying about moving to Ireland.
Oh. That's interesting. Okay. Well, the thing is that from our perspective, people move often for lots of reasons. Sometimes it's for love. Sometimes it's for family. Sometimes it's for work. Sometimes it's for politics. At the end of the day, they do go back and forth, right? And the flow goes up and down. The trick is they need to know what they're doing. And I'm really surprised. I'm really delighted to find you guys because this was an opportunity that I'm so surprised. It's been 30 years and we haven't discovered this. So I'm happy to share your secret with everybody.
Yeah. And likewise.
No, this is great. So Kevin, thank you very much. I promised you 20 minutes together, so I appreciate your time. I know you've got a lot to do, but this has been very, very helpful. So for those listening, if you have a property in Florida or you're looking to get one, I'm happy to connect you with Kevin. We'll make sure we have your contact details for everybody. But I think this is a great solution that Canadians should be looking at. So Kevin, thank you for your time today. And listeners, thank you for listening in.
And thank you, Darren, for having me today. It was a pleasure.
Thank you.
This has been Two-Way Traffic with Darren Coleman. Thanks for watching and listening. If you have any questions or comments or ideas for new episodes, send us an email at twowaypodcast@gmail.com. And you can find the Two-Way Traffic Podcast on Facebook and Twitter. This series is a production of the Acme Podcasting Company.
On behalf of the Two-Way Traffic Podcast and Portage Wealth of Raymond James, thank you for listening to this conversation. This podcast has been prepared by and expressed the opinions of Darren Coleman and his guests and are not necessarily the opinions of Raymond James Ltd. Statistics, data, and other information presented are from sources Raymond James believes to be reliable, but their accuracy cannot be guaranteed. This podcast is for information purposes only and is not construed as an offer or solicitation for the sale or purchase of securities. Investors considering any investment should consult with their investment advisor to ensure that it is suitable for the investor's circumstances and risk tolerance before making any investment decision. Past performance is no guarantee of future results. Information provided in this podcast is general in nature and should not be construed as providing legal, accounting, and/or tax advice. Should viewers have any specific questions or issues in these areas, please consult your legal, tax, and/or accounting advisor. Raymond James Ltd. is a member of the Canadian Investor Protection Fund. Raymond James USA Ltd. is a member of FINRA and SIPC. Raymond James Ltd. and Raymond James USA Ltd. financial advisors may only transact businesses in provinces and/or states where they're registered.